So Neil, first of all, what did they spend all this money for? How does this really work as a practical matter? Does midnight come tonight and somebody flips a switch and all switches over?
Good evening. Not quite midnight comes and a switch gets flicked over. ESMA is leaving it up to the banks and asset managers to decide when they want to flick the switch themselves. So most people will be doing it when they come into work tomorrow morning. The money has gone on mainly around compliance systems and software, a big expense to make sure that you can keep all these trades for up to 5 years, so that even when something happens, the regulator can piece together quickly what happened, who had an overexposure of risk, and how they can prevent those mistakes happening again.
So if these firms do make mistakes and they have to report to regulators, given that this is still the launch, nothing is really set concretely, will regulators be a little bit more lenient, at least when it's the start of this new system?
Absolutely. Regulators in recent weeks realised that basically the finance industry wasn't ready for this. They had already given a 1-year extension, but asset managers and banks weren't able to get ready in time. In part, that was the regulators' fault, because they had delayed questions and answers, which would have allowed the industry more time to prepare. So they have said that as long as you've made an honest effort to get ready for this legislation, they won't penalise you, certainly in the first couple of months. Really, towards the end of the first quarter, we're going to see more and more of the legislation kicking in, and then by mid-year it should in the main be implemented.
So Neil, regulators like to talk about efficiency and transparency, and it's hard to be against efficiency or transparency, but in the practical matter, who's going to save money off of this? And on the other side, who's going to have to spend more money? Who are the winners and losers?
The winners and losers in the finance industry are the banks, the big banks, who will be better able to provide research or better execution. And then at the other end, the smaller research providers are expected to find a way to get customer base with their ideas, charge a lot, very few customers for trading ideas. Boutique investment banks in the middle will probably suffer, and smaller asset managers and smaller hedge funds who have to pay a lot towards compliance will also suffer. The real winner, according to ESMA itself, is probably going to be the retail investor, the mom and pop investor, who will hopefully end up with a better deal on fees. Fees in Europe are much higher than in the US for investment, and people are moving more into the markets as pensions move from defined benefit to defined contribution to defined benefit. That's changing the way European people invest, and they hope to get a better deal for them as a result.